Welcome to Loop TV. I'm your host, Gene Munster, along with Doug Clinton, and I think I see Holly on the couch in the back there. Unlikely that she'll contribute, highly likely Doug will contribute. And the topic today is Facebook and the antitrust wranglings. It's official, it has arrived, and I'm just going to quickly set the stage. Is that this has been widely anticipated since the July hearings on Capitol Hill. The government has an issue, along with 40 plus states, about how Facebook has used its M&A practices, most notably to depress the competitive field. And also regarding the lay of the land here is over the past week, Facebook shares are down just under 1%. Amazon shares are down about 2.5%, and Apple's shares are up about 1.5%. So muted response from the market. I want to bring you in, Doug. When you think about this and think of all the variations, specifically, what's the biggest risk you see to these outcomes? What potentially could go wrong here for Facebook?
I think the worst thing for Facebook out of the entire process is how it will affect their M&A abilities. I know we laid out kind of four potential negative outcomes for Facebook. That to me is actually number one. I think we listed it number two. I would actually make it the worst outcome. And the problem for Facebook, in my opinion, is they just don't have a history of organic ingenuity. They're not good really, and they haven't shown that they can develop new products internally. They've acquired Instagram, they acquired WhatsApp, they acquired Oculus, probably their most exciting products outside of Facebook core. And so if they can't rely on M&A, which they have been proven to be good at, can they develop things organically because they need to now?
So play that forward a little bit is they undoubtedly, probably regardless of how this plays out formally from a lawsuit perspective, it will get more difficult for them to do M&A. How does it actually impact the business then? What was the vector? Where's the pain point for them?
I actually don't know that it will affect the business necessarily all that much. I think it affects their future though, just more broadly. I think Instagram is probably in a great place. If you think about their trajectory, I think they probably are going to do $30 billion in revenue this year, a little under half of Facebook's total revenue, total company revenue. Next year, they might do 40 billion. And if you actually put a Snapchat like multiple on Instagram, it would make up the entire value of Facebook as it stands today. So if I think about what does it mean to the stock, what does it mean to the business? I don't know that M&A means anything in the near term, but their inability to go out and intelligently acquire the next Instagram, that's really the thing I think that's hard. If you're a 10-year investor, you have to be worried that they don't end up acquiring the next big thing.
And how would that next big thing, let's say they're not able to acquire it and it gets some traction, how would that ultimately end up impacting revenue growth?
Eventually over time it would take away time being spent on Facebook's platform broadly, whether that means on Facebook core, which is probably the piece that's most at risk, or maybe it's Instagram, and that's probably 5 or 10 years away from being at risk because I think people are really tuned into that right now. But I think that's the ultimate issue is they play an attention game. And in the attention game, if you don't have a product that is really engaging, really addictive, you're going to lose the game. And in this world, the digital world, the attention game, it's not just Facebook versus TikTok versus Instagram. It's also versus Netflix. It's versus Audible. It's versus reading a book. And it's certainly versus playing a video game on your new PlayStation 5, which I think that is probably the biggest threat to all the attention, winners today, Netflix, Facebook, Instagram, is actually that gaming emerges as the new thing where people want to spend time because time is the most precious thing we have. And that's what all these companies are fighting for.
And Doug, you've written about the next social platforms are going to be gaming based. And so go to Loop Ventures to read more about Doug's writings on that. And ultimately, I think that is the long term. I would agree with you. That's the long term pain point. We want to emphasize a couple other quick housekeeping items here, too, is that in terms of engagement or this being a negative impact to the Facebook usage, highly unlikely. At the end of the day, is that they've been through the Cambridge Analytics episode and nothing changed. People, speaking of being addicted, they are addicted to Facebook properties, and so they're going to stick with that. We don't see any dip in terms of any of the MAUs, DAU numbers going forward. And then I just like you to briefly frame in the breakup scenario. This is that it doesn't go well for for Facebook with this litigation, and they're asked to create three separate companies: Facebook, Instagram, and WhatsApp. Question, Doug, is what happens to the overall value in the case that this company gets broken up?
So I was just pulling up Snapchat's current 2021 revenue multiple. I can give you some more exact data. So Snapchat's trading 23 times next year's projected revenue. If we assume that Instagram could do 40 billion in revenue next year, which I think is probably achievable. You put a 23 times multiple on that. I'll do the math live real time on our screen here. 40 times 23. It's a $920 billion asset. That's what Instagram should be worth if it were valued like Snap. That's more than Facebook's current market cap. And so if they break up the entity and Facebook core is trading standalone, Instagram is trading standalone, would Instagram be worth $900 billion potentially? I mean, it's certainly the most, I think, exciting social network today in terms of revenue growth and absolute size. And Facebook core, you would still have to argue, is worth several $100 billion because it's highly profitable. So if you break these companies up, you could make a case where maybe the separate assets are worth 20, 30, 40% more than they're actually worth today.
I would absolutely agree with that. Last question, bring it all together. Should a Facebook investor be worried right now about this lawsuit?
I wouldn't be worried in the near term. I would be worried if I were a long-term Facebook holder. We at Loop are long-term focused investors. We like to invest in companies for 5 to 10 years. And I wouldn't want to hold Facebook, I don't think, for 5 to 10 years. There's other names that we like a lot more that I think have more potential upside than Facebook over that time period and don't have the risk of not being able to perform M&A and potentially not innovating, which Facebook at its core hasn't really shown an ability to do.
Fantastic. On the behalf of Holly, Doug, Gene, and Loop TV, thanks for joining, and bye for now.